Hello, hello, hello.
Good morning, everybody.
Welcome to part 2 of Networth and Bill.
We are Beyond Beauty School. I'm Jules Cota. This is Liz Diaz. We are here on behalf of Salon Republic, and we are so excited to bring you guys episode 2 of our financial literacy curriculum, Networth and Bill.
That's right. Before we get started, we want to say thank you again to Salon Republic for allowing us to use their platform, The Hair Game, to share this financial knowledge with you guys. We also want to thank our guys at Manhattan Beach Studios for putting this whole thing together for us. As you can see, this is a little bit different than we had last week. We were inside their studio, but we decided to be more
socially responsible, and we are taking our quarantines to the next level, and we're in our living room. Fortunately, last week we were in a position to access Manhattan Beach Studios since it had been closed for a couple of weeks and quarantined and isolated and safe. And now we're just doing a little bit more to do our part socially during COVID-19 and stream from our living room. So we're really grateful to Manhattan Beach Studios. They have this amazing technology that we can use where we can stream from here. We can call in Michael from Fields Wealth Management, our very special guest today. And yeah, we have a great presentation for you today. Michael's going to walk you through understanding your COVID-19 stimulus check, different kinds of banking and investment accounts that you can use, and how to be financially prepared for the rest of your life.
So we can actually read all of the comments below, so please say hi to us, and if you guys have questions throughout the presentation, we can read them and we can answer them as we go.
And bear with us, sounds a little bit different today because we're all kind of streaming from our homes and everybody kind of has their own things going on with work or school or whatever, so we're doing the best that we can with this amazing thing that we have. Liz, what are you looking for? So anyways, we want to introduce everybody to Michael Fields from Fields Wealth Management. So why don't we just jump right in? Michael, what up?
Great.
Hello, Michael.
Thank you, Jules and Liz. How you guys doing?
We're doing
Good.
Can you hear me?
Yeah, this is whole
Good,
setup is
yes.
pretty cool. Yeah,
we can hear you
perfectly.
You're on CNBC,
right.
so it's really neat. I absolutely love it. Thank you guys for having me on.
I know it is definitely very CNN style.
Yes.
I love it.
We feel like news reporters.
Yeah.
What's up, Eric Taylor?
Hi, Eric.
Shout out to Eric Taylor, owner of Salon Republic, host on the Hair Game podcast, hairstylist. He's like the godfather of independent hairdressing or something.
Yeah. We were on Eric's podcast, episode 133, about a week ago. So if you guys haven't checked that out, make sure you do. I'm not typing it. Sorry. Anyway, so should we get started? Hi, Carla.
I'm ready.
So happy you're here with us.
All right. Sorry, you guys. We have like 18 things going on to try to make this work for you guys. So bear with us. This is all brand new technology for us.
Yeah.
So Carla, what's up? Carla tuned in last week on our first episode. Just a shout out to Carla. Carla is a fantastic young hairdresser. She's a recent graduate from Paul Mitchell. She is out in the field working, and she is also the very first recipient of the BBS State Board Scholarship. So
Woo!
We love her.
So proud of
we
her.
believe in her. We're so proud of her. And she, she's the reason we keep doing what we're doing, because we want other hairdressers to stay inspired and we want to help them as much as we can. So one thing that BBS did was we created a state board scholarship to help aspiring students cover state board costs and things like that. So we are so proud of Carla. She's like our little protege. We love her. And yeah. Oh, and Holly tuned in also. Holly's great. Another independent salon suite girl. She's not with Salon Republic, but we will try to recruit her. But Holly's amazing. She's been in this space for a long time. She's been in education for a long time. She's a very accomplished educator with some pretty big brands like B3. And yeah, Holly's one of the people that's been on it since I met her. She's like into education, wants to know more. So Holly, I'm so glad you're here. Thanks for supporting us.
Yes. And again, we are live from our homes, so bear with us as we might have some background noises and stuff, but we are doing the best we can to give you guys the best quality that we can give you for this class. So you guys, Michael, Jules, should we get started?
Yeah, Michael, why don't
Sounds
you
good.
tell us a little bit about you and what you're doing and why we have you here?
Absolutely. Well, first, I want to thank you guys. Number two, my wife made tripping in the back. She's actually in school as we speak, finishing her degree, and they canceled all of her classes or in person, so she's online in the other side of the place. So I apologize if you hear some things about psychology and God knows what. But I
Good.
think
We'll
I'll
have
just
her
start
on
off
next.
by
We're all going to need some help and counseling.
you're gonna hear her. She gets loud. Um, I think the important thing is really why I'm here today, and I think it stems from the relationship I had with you guys. When I got to see what you guys were developing, I found a tremendous opportunity to help people just like you guys, because I feel it's a completely underserved market where to create financial literacy is one thing, but then to implement it is another. And I found a lot of people I worked with in the past didn't have the tools or the ability to access them. So I dedicated, the months and months into building a program for individuals just like yourself. More importantly, this today is dedicated to stylists, self-employed individuals, business owners. So we can go ahead
Which
and
is
get
so
started.
awesome because this is not something that has really ever been offered to us hairstylists before. So I'm really excited for everyone tuning in to be able to take advantage of this opportunity, because this is really, really huge for us. I mean, I feel like before, as I has expressed, that we have, unless you've been working for a corporate company or something, 401ks and that sort of thing have not been accessible to us. But now with Michael's help, it's so easy to do. So we're really, really excited to share all this information with you guys today, because it's really going to be huge and help you guys a lot. It's helped Jules and I, and that's why we're here sharing with you today.
So the two main things Michael's going to go over with you guys, first and foremost, is understanding the COVID-19 stimulus check. Who's entitled to one, who gets one, how do you get it, all that stuff. And then also what you can do with that check or what you can be doing with your finances. Michael's here to help you explain different ways of investing, different types of accounts, what they're used for, and how they can help you, and why right now is such a good time to start investing. So,
Right.
Michael, I think we'll turn it back over to you. And whenever you're ready to get
Great.
started, you can just
I'm ready.
give our camera guy the prompt.
All right, prompt set. Fire away.
So, Mark, I think he's ready for the slideshow. Perfect.
Yeah. So as Jules mentioned, and Liz, I thought it'd be really important to talk a little bit about the COVID stimulus check. The fancy word for the stimulus checks is the CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act. And really, what does it mean? I've had some questions from a lot of my clients saying, well, how do I get one? What do I do? And really, before I get into that piece, I wanted to see if we can go to the next slide. We touched on briefly a little bit about who I am. I think it's an interesting story. I started in this business back in 2007. And for any of you guys that can remember, 08 and 09 was a very scary time. It was the worst recession we ever faced since the Great Depression in 1929. And eerily enough, it feels a lot like that. And in some ways, it's much worse. A lot of that stuff is coming to fruition now. As you can see, I mean, they're anticipating 25% of the country is going to be unemployed. So that's a pretty scary thing when you think about. And when 50% of the country doesn't even have a retirement account, let alone a cash reserve account, and they live paycheck to paycheck, it's troublesome. So we're really actually going to see the effects of that more long term, not necessarily today, but what we're hoping for and what's being discussed in Congress is hopefully there'll be more of these stimulus checks to go around. Because I don't know about you guys, as you'll see, the amounts are really just a tiny little Band-Aid on a gigantic wound. So, but at least let's make sure that we're taking advantage of the things that are coming to us. And more importantly, it's a lot of things that you just qualify for. We just want to make sure that you get it. So
That's
that being said,
awesome,
let's
Michael.
roll it.
Thank you.
Mm-hmm. let's jump into let's get right into it. Next slide. So the easy thing here is 94% of us are going to receive this without even realizing we did anything for it. And what we're going to talk about is who's eligible for it. And the easy part here is most of us are going to be eligible on this call. If you've ever paid taxes, you're going to get a check. However, there's some caveats to that. Some people may not qualify for their adjusted gross income. I have a really neat calculator that we can jump into if you want to know exactly what you're going to get. But I'm actually very curious now, how many people have already seen or received a stimulus payment or disbursement in their account?
So if any of you guys have already received your stimulus check, anybody who's listening, go ahead and type a number 1 in the comments so we can see how many people, if anybody, has received their stimulus check. We've been hearing rumors that people who bank with Wells Fargo have been receiving theirs first or already. So if anybody in the comments has received your check, put a little number 1 in there for us. I'm guessing that means nobody.
We have not received ours.
Yeah, we
Nobody's
also haven't
received
received
it.
ours.
I haven't received mine either. So that's an interesting thing. So they are saying that I do know some of my clients have already received it. Funny enough, most of them have all been Wells Fargo clients. So they're dispersing it out. I mean, there was over $250 billion allocated towards that. So everyone will get it. You're not too late. But I think that's a good point to see, okay, great. We're going to get some money from the stimulus package that was granted to us by Congress. What are we actually going to get so that we're prepared for it? So let's take a look at the eligibility screen.
Holly, thanks for filling us in. Holly is with Wells Fargo and she has not gotten her check yet. So, okay. So our theory is bust. All right, moving on.
Well, there
Who
might
gets
be
what?
something else in there. Yes. So let's, at a high level here, everyone's a little bit different, but depending on how you file, single filing, you're going to get $1,200. If you file joint, it's $2,400. And then if you're family filing, you're going to get $2,400 plus $500 per kid. Now, is there any questions on that piece? Because I'll go into
I have a question.
Yes, please.
What if I made more than 75,000 last year? What if I made 120,000 last year and I'm a single filer?
Excellent. Okay, so in the next slide, what we're going to talk about is the breakdown of who actually may not get it. There's something called a phase.
I have a question too, Michael. Like if they made under 75,000, then they will be receiving a check.
Absolutely
it's
correct.
Up to 75,000, right? Okay. Just to clarify.
Correct. So some of the caveats of this is you've had to have filed at least a bare minimum your 2018 return or your 2019 return. And I'll tell a story about the 2018 and 2019, because if you haven't filed 2019 yet, it's okay. But they're going to look at your 2018 filing on your adjusted gross income to determine where you fall in how much you get. So if you're over 75,000, there's a unique
walk
formula.
Us through what happens if you're over. Okay, perfect.
Okay, so what we'll see here is the phase out start in a very complicated formula. Of course, everything with the IRS is complicated. So for every $5, $5 gets cut for every $100 of income over the 75,000 if you're single, and then that doubles if you're filing joint. I just wanted to make it really easy, and on my website, I put a calculator. On one of the tabs, I have COVID or BBS COVID-19. If you go straight to my website, I can actually do a couple examples for you guys now. I'm Michael, not sure if
why don't you go ahead and send me the link, Michael, on our little chat that we have, and then I will post it in the comments for YouTube.
Perfect. Thank you.
All right, hold on here. Okay.
So Michael is live from his home office, and we are live from our quarantine house. Just so everybody knows, Liz and I are roommates, so we are already quarantined together. We are still practicing social distancing, but we live together. So lucky for us, we are already in each other's safety zone.
Currently copying or pasting the link that Michael just sent
Great.
us in our comments. So you guys please be sure to check that out.
And what I'll do right
Holly
now is
asked a question. Holly asked a question. She says, what if you have filed 2018 and 2019 returns, but you are in an installment agreement with the IRS? Now, I think what she's probably wondering is this going to be, will this check affect her installment agreement? Will she not be qualified for one maybe because she owes money already? How does that work? Do these things exist in the same space without affecting each other or what? I think that's what Holly's probably trying to get at.
Okay, that's a great question. So the way that they set it up in Congress, which is wonderful for us, is that if you're in an installment plan or you have taxes due on 2018, this does not impact your stimulus package. There's only one thing that will is payments of alimony. So if you haven't made alimony payments, they're not going to give you the stimulus. So that was the only way that you're not going to get a stimulus. So if you owe money, a good example, I filed my 2019. 2018, interestingly enough, I made more money in 2018. And because I got married, there were some unique things to it. My 2019 qualified me for it. So I quickly filed 2019 to get it. So in the event that 2018 you're over the limits, but 2019 you're not, get that 2019 ASAP, and then you can, if you end up getting a payment based on 2018, you can always revert back and go off 2019 with your CPA. So it's not the end of the world. If you haven't filed 2018 or 2019, I beg you, please do it. This is free money. You want to take advantage of it.
Awesome.
Did that answer that question?
I think so.
Thank you.
I also wanted to do is, while I'm on my site now, give me a couple examples and I'll just give you guys a readout of what you can expect. If you haven't gone to my website yet, I will go ahead and give you guys an idea of what you can expect. So Jules or Liz, go ahead and give me
Mike, For example, Mike, last year, let's say my taxes were at 90,000. Let's just use a round number like that. So 90,000. So if you wouldn't mind showing us or using the calculator, and everybody, I put a link in the comments on this YouTube comments to that calculator that Michael's talking about. Yeah. So you could calculate your own. But for example, Michael, let's say you made over 75K. So let's use 90 and let's see what that looks like.
Okay. So I'm going to ask, so the calculator is going to ask for 3 easy variables. The first one is how did you file in your latest filing? It's either single, married, file joint, or head of household. So I'm going to use single in this example. I'm going to put adjusted gross income in 2019 or 2018. The calculator will work for both. I put 90,000. Dependents, or how many children under the age of 17, I'm going to put 0 for now. And calculate it, you would get a stimulus payment of $450. The website I'm using is phenomenal. There's a lot of resources on there. That's why I put it on my website. You're going to find tons of information on pretty much everything you can imagine. It's called Magnify Money by Lending Tree. I'm sure everybody's seen those commercials where
can you send me a link, Michael, so I can post it?
Okay. Coming.
Now, we have a link to the calculator in the comments, but we also listed in the comments the 3 things to calculate it. So,
if anybody needs help figuring out what their AGI is, I can do that offline for you. It's a line item on your 1040 or however you filed. We can do that later. You can send me a question and I can help you find it just to get an idea.
Okay, well,
great. So explain to us then how it goes if you made 90, if you made over the 75.
Okay, so when you make over the 75, there's a calculation that gets done that you reduce $5 of your benefit for every additional $100 of income. Now that's
so maybe we could go to the slide that talks about that breakdown.
Okay.
Perfect.
That's it. Okay.
Now walk us
so
through,
this is
Michael, if somebody had 90.
Okay, so if somebody had 90,000, like I said, the $5 gets reduced of the 1,200 for every $100 you're above the 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 75, and it caps out at 99. So what the IRS did, or actually the Treasury Department, is they wanted to figure out, based on the $250 billion, how many people can we help and how many people filed in that range. That's where they came up with that phase out figure. If you're married and filed jointly, the exemption runs out at almost 200,000. But don't try and calculate this on your own. Use the calculators that in the link that Jewel sent, or from my website. It's the same thing, and you'll get a really good idea, an exact idea of what you'll get. It's not worth the time to calculate it, I promise. Unless you really like doing fractions and multiplication. Why bother?
So basically what you're saying is the $1,200 will get lower. It'll go down the more money you made.
Yes. So in the calculation that I did for the calculation that I did for the 90,000 for somebody who filed single with no dependents, they're going to get $450 is what I showed there.
Oh my gosh.
Okay, great.
Yeah.
So just so people, that it sucks because you're like, what? That's like,
but it's
so much less, but it's better to know what you qualify for and what you're going to get, what to expect based on the very real numbers of what you made last year, because that's what they're going to go by. So there's no surprises for anybody in case you're like, I made more than that. How come I didn't get $1,200? So
exactly.
Yeah.
Okay.
Okay.
Perfect.
What's next?
Moving forward.
Okay. There's one more piece here I'm just going to check for you guys because it was
great.
So the other one I've been getting is about, okay, I have 2 kids, and what if I'm over the amount? Do I still get the $500 per kid? The answer is no.
Great question.
You will not.
Oh.
Yeah. So that's the bummer of this. The only way you qualify for all the little perks of the dependents, and I won't go into it because there's so many different rules for dependents, but usually just think of if you have kids that are under 17, they count as a dependent. But if you're phased out, if you make more than 98,000 as an individual or 198,000 as a joint, you're not going to get anything, regardless.
Got it. Okay.
But if you have pets, then it's unlimited, right?
Well, I was hoping so. I've got so many. I will have my assistant, which is my cat, will jump on my lap any minute now. I hear her watching. She's really excited when I say it. So, nope, nothing for pets, unfortunately. Unless you claim it for dependent.
The Fields Wealth Management mascot is out of luck.
No, right.
Let's take a little pause here, Michael. Yeah, let's take a little pause and ask if there's anybody with questions. I see we have Olga tuned in. Olga's part of the Salon Republic family. What's up, Olga?
Angelica Perez said this is so helpful.
Angelica, what's up? Angelica is another one of our STAR students. She is our mentee through the Mentorship Matters program through Beauty Changes Lives, which is an amazing nonprofit organization that offers financial scholarships for all kinds of advanced education and cosmetology school. So yeah, they do great. They're a great resource for scholarships for education. They also have a COVID-19 relief fund that people can apply for. So we met Angelica through our Mentorship Matters program. She's one of our mentees. And and hi, Tracy. Tracy's on here too. Tracy's another badass in this industry. Hi, she works with Electric London Hairdressing. She's in charge of probably the whole West Coast of the United States now. Sorry, Tracy. But yeah, so great. Lots of people tuning in, lots of independent hairdressers with different backgrounds tuning in, people who are married, people who are divorced, people who have kids and they don't or do have custody or share custody. So, Michael, those were some really good points that you pointed out about filing and with children.
Yeah, and it doesn't look like we have any questions as of now. So let's go ahead and keep
There's one more
forward.
piece
And then if there are questions, we'll definitely let you know.
There's one more side thing that I forgot to mention here is I've had questions. If I get the stimulus check, can I also get the disaster relief grants the PPP program for small business owners. Those are two separate items, and
Great
it does not
question.
impact the other. There was a great seminar I sat in on Saturday. Jules invited me to it, where they went deep into it with a wonderful attorney. Um, if you haven't applied for the PPP program, or you don't know what I'm speaking about, that's a great time to get in touch with an accountant or a CPA, because as a small business owner, if you had any type of revenue prior to February 1st, you would be entitled to potential grants, or a very low interest rate loan by the Small Business Administration. I'm not going to get into that piece here because that's a 2-hour presentation on itself. But keep that in mind. They are separate. One doesn't affect the other.
So the PPP loan is a small business loan that they can get through their bank, correct?
Yes, that is absolutely correct. Most of the big banks participate in the program. You may have actually received something if you have a business account with any of the big banks or even the small credit unions. They're issuing out emails giving information around that. If it would help, I can get you guys a link to where you can get more information. I know I advise some of my clients to go ahead and apply for it. It takes, as long as you have the right documents in front of you, it took 10 minutes to fill it out. So that's something that you should also be looking at.
Okay, perfect.
Great. Thank you, Michael. We have a question on YouTube from one of the viewers. Tracy asked, for people who owe alimony, she wanted a little bit of clarification on that. People who owe child support or back child support, how does the stimulus package affect them? And I know you touched briefly on it, but if you just want to cover that one more time for some of the people who are just tuning in.
Yeah.
Okay, I'm going to actually pull up so from my understanding, and I'm going to also pull up the exact law that I will come back to. What they're saying from the IRS website is if you are delinquent on alimony payments, you would not be subject to it. But if you owe alimony payments, it's a different thing. So if you haven't paid and delinquent, that would impact it. If you have paid or you're on a program, that won't impact it.
So if you're current with alimony or child support payments, you're good to go. If you have any back payments that you owe, you won't qualify for the stimulus check. Is that correct?
That is correct.
Okay. Got it. Okay. Perfect. Thank you so much.
All right, so let's
keep
going.
No, you can keep moving forward.
Yeah,
you're doing great.
There's more questions.
Awesome. Okay, let's go ahead and jump in. We discussed this piece here. Okay, I feel as though that I touched on this. I won't go into this in detail. There's one other piece that I'll mention. If you were worried about filing your 2019, don't be. If you think you're going to owe money, because they've extended that deadline to July 15th. So if you want to get your 2019 in and your 2018 doesn't qualify you, but 2019 does, and you're worried that, I'm going to owe money, they've extended that to July, and who knows, they might keep extending it. There's a lot of things that I think they're going to keep pushing out there. Be prepared. I mean, they just did $2 trillion, which is, I've never heard that. In 08 and 09, when they did $880 billion to bail out the banks, everyone thought that was unheard of. And now we've got $2 trillion. And there's more on the horizon, supposedly. So this is good that we're practicing this now.
And the $1 trillion bailouts you're talking about, those aren't for the big banks this time. Is that correct? These $1 trillion bailouts. Right. So I think that's a big deal. And I think it's important to point out that in the past, some of these bailouts have been more corporate directed, and this time it's a little different.
It's interesting the way they broke it out. Is the $2 trillion has a breakout. Some are going to essential services, certain businesses. There's an oversight committee that's in there now. They've learned a lot from 08 and 09, but they really rushed through this bill because people were so panicked. And I mean, every week we're going to have 3 to 5 million people unemployed or filing unemployment. So they rushed this one through with some oversight, meaning that they don't want companies. So we've got the small businesses that are receiving their shares, but then you also got big corporations that are going to be receiving some, like the airlines is a great example. It's a whole topic of debate that we can save for later. But yes, they've actually dedicated a large portion of this to small businesses.
Great.
It's amazing.
And
Thank
individuals.
you.
That's awesome.
That's so great. All right, Michael, you want to keep moving forward? I know you have a lot of things to talk to us about, especially about what you've had me do with my stimulus check when it comes in, and what you're, I know you have some cool things, like some cool challenges and like little financial exercises that you do with your clients. So I'm excited for you to share those with everybody.
Yeah. So if you guys already haven't gone out like a notebook with a pen, like to start taking notes, like I highly recommend that you start doing that at this point. I mean, Michael's already given us some really great tools, but like he's going to be giving us even more. So
absolutely
get ready for it.
And for those of you who've just tuned in or are a little bit late, we are Beyond Beauty School, Jules Coda and Liz Diaz. We have our special guest, Michael Fields of Fields Wealth Management. Michael is our personal financial advisor. He manages my money. I turned to him one day and said, like, how come you can't do what you do for me for other hairdressers? And he was like, well, I can just give them my number. So instead of just giving everybody his number, we've decided to work together and come up with a really comprehensive financial planning program for hairdressers specifically. So Liz and I have been working closely with Michael to kind of develop what would be a more accessible and understanding and relatable way to manage finances.
Yeah.
So
really exciting time for hairdressers.
Yeah.
Especially right now in this time of crisis when we feel like we're kind of sinking. It's really good to be able to like utilize these tools once we're able to go back to work and moving forward with our life and how we use our money and where it's going.
And I think one of the most important things Michael said to me the second it was announced that the stimulus checks were going to be a thing was that he has a plan for my stimulus check already and what it's going to do and how he's going to invest it. So his big thing is making this check work for you, make your money, make more money, and utilizing this time, this crucial time to reset.
Yeah.
Reset your finances, reset your business, reset your personal goals, all that stuff. So I think what we move into next is Michael's going to walk us through why he made me open up 80 different kinds of accounts and what they're all doing. but he's going to give us this really great breakdown. Go ahead, Michael.
There's another piece there that I wanted to touch on before I get into that. It's a slide that's putting your stimulus check to work at a high level, because I'll walk through what I suggest, but then I'll also want to give you some other things to think about because it's a lot to cover. But there's one, yes, this perfect. So the questions I get asked, as Jewel said, is what's the best things to do with it? At a high level, you can keep it in your checking account. What I like to call that is a cash reserve account. Everybody should try their best to get anywhere from at least 2 to 3 months of a cash reserve of expenses. So for example, if you spend $2,000 a month, you should have at a bare minimum, try and get to $4,000 in a cash reserve account that you can tap into for a rainy day. Other people, you want to always make sure actually you're keeping your minimum debt payments. So versus saying, okay, I always like to pay off a card, maybe at this point, if you're not working, you're not generating an income, maybe it makes more sense to just make the minimum payments in the short term. If you have some extra cash lying around as well, take a look at, and you have some debt, take a look and stack rank all your credit cards. Take a peek at those and see, okay, put the highest interest rates at the top and then go all the way to the bottom. That's where you start. You want to reduce the high interest rate credit cards as soon as possible. And I always like to explain to people, they say, well, Mike, I really want to invest some of this money. And I'll say, but you got a credit card that's charging you 25%. Unless we're going to be making more than 25% in the market, it doesn't make sense to be paying a credit card company that much because you're going to be losing that in interest. So does that make sense for everybody?
Absolutely. And that is such great advice. I also want to encourage people to take a screenshot of that slide we just had up. If Mark, if you can put that back up again, just so they have an idea of where they should be putting their money and how much money they need in each account. This is really, really important and useful information. So please take a screenshot of this.
Later on,
5 little tips and tricks.
The next one is growing your safety net fund. A safety net fund is a little different than a cash reserve. Think of your safety net fund as something that you're going to use greater than 6 months and less than about a year and a half. So, and there's, I'll explain the rationale behind that, because a cash reserve is just like you're checking your savings, but a safety net has the ability to earn a little bit more for us. And that's strictly based on the time that we have to get there. And I'll dive deeper into that. And lastly, it's fund your retirement, whether you have a Roth, a SEP IRA, or a regular IRA. If you have some extra funds, you can put it in there. Like I said, going forward, I will give you what I like to do for most people in this situation.
Michael, what if we have some stylists and other beauty industry professionals listening that don't have any of these kind of accounts set up? Like, I mean, like, I know a lot of hairdressers, like, who don't have a retirement account set up, or don't have a safety net account or an education account for their kids or whatever.
Where do they even start?
So, yeah. What do you even do?
Like, what do you even do? Yeah, exactly.
Like, do you just like Google open an account, or like, what do you do? Walk us through.
Of course you can do that. I don't recommend it.
Also,
but what we're going to
also really quickly, just to interject, we had a few people chime in the YouTube comments that they would be interested in debt consolidation information. So just make a little note, Michael. That's something we could reach out to other people about. Yeah. That might be maybe something we'll do next.
No problem. Easy.
Okay, so how would people get started?
So let's go ahead and keep rolling through, because that's exactly what I have. We'll start at a very high level on what are the different types of accounts that exist out there. And interestingly enough, at one point or another in your life, you are going to have these accounts set up. And especially in this day and age with technology, it's really allowed investors the opportunity to start very small, whether that's, you know what, I don't have any money to fund it, but I want to get it started. Think of it as creating a goal for yourself. And we're going to start to the most, I mentioned, cash reserve is an account that you're going to have in one way or another, whether it's a checking or savings account. Cash reserve, as I said, you want at least 2 to 3 months of expenses. We go to a safety net. Once we've filled that bucket, safety net is a little bit more of a long-term. Jules and Liz, if you want to chime in, what would we call a safety net from BBS?
A safety net is kind of like our OMG goals. It could be our NBD goals. It could fit into either category, just depending on what you're trying to put in your safety net. Like, maybe you have an elderly dog that sometimes needs freaking weird surgeries or treatments, and it costs, $1,800 or something. Maybe that's something that would be in a safety net account. It's something that you're not sure if you're going to need to pay, but you might, because this dog is real old. So who knows?
So what Jules is talking about is, in our first presentation here on the Hair Game podcast, which we aired on the 3rd, we talked about having NBD, OMG, and WTF goals. So NBD, no big deal goals, were just short-term goals. OMG were maybe more long-term goals, like 3 to 5 years. And then WTF is more like retirement, like how much money do you want to have in your account to retire? So that is what she's referring to, which is what we went over in our first class. So if you guys haven't checked that out, make sure you do already. But Michael's going to go more in detail about like what specifically we should go into each account.
Okay, so Michael, you can go ahead and continue.
Okay, so going down the line a little bit, we see a general investing account. You can also tie that into major purchasing account. So think of these as accounts that you can set up for specific goals. A general investing account can have many different things. Yeah.
I have a question, Michael, about why would I want to have, like, in this picture, it shows like 6 different types of accounts. Why would somebody want to have money in 6 different places? Why couldn't I just put it all into one place together so I know how much I have total? Is there a reason that money gets put into different accounts?
There definitely is. There's really 2 major reasons.
Other than separation.
So other than separation is a major reason why people like to say, okay, I want to have an account dedicated to a specific goal, and I don't want to commingle those funds together. Because if you start putting your safety net and a goal-based account together and you start drawing from one, you lose focus of what it's intended for. So like I said, in this day and age, when there's no minimums and no account fees, why not segregate your money so that you can really focus and hone in on each specific goal? The other reason is a tax reason. So certain accounts are taxed differently based on the goal type. So education accounts can potentially have significant tax advantages to them depending on which state you're in, versus a general investing account that's used to save for one of your kids or nieces, nephews, or anyone's education. You miss out on some of the tax benefits there. Along with a retirement account is definitely taxed differently, whether you have a Roth IRA, which is tax-free growth and comes out tax-free, or a traditional IRA or a SEP IRA where we take pre-tax dollars. So just like a 401k, money that comes out before it's taxed gets put into an account, grows, and when you reach a certain age, it comes out and then it's taxable. But during the whole growth, it's what we call tax deferral. We don't pay tax on it every single year. So the power of reinvesting what we normally pay in tax on investment growth gets to compound and grow significantly more.
Interesting. So it seems like all of these different accounts kind of grow money differently. So is it because you invest them in a different manner based on the goal? Is that why you keep them separated?
So there's really three things that I like to look at. It's number one is, okay, what is the goal for? Number two is the time horizon. How long do we have to achieve this goal? So safety nets and major purchases, maybe. The shorter the time frame, it's a different way of investing. So think of it like this way. So the more time we have, the more risk we can assume to reach our goal. Now, risk doesn't always mean return, but historically speaking, it does. Because if time is on our side, that means we can go a little more aggressive towards reaching our goals. And I will actually show a difference between a safety net account and a retirement account on how we want it to grow differently and why we segregate them.
Awesome.
Wonderful.
All right.
Walk us through that.
Yeah.
All right,
any questions so far? If anybody has a question, chime in. Or how about if anybody listening has a retirement account, give us a number one in the comments on YouTube. How about that? If we can just start there. Anybody who has a retirement account, give us a number one in the comments. Let's see. If anybody has it.
So Michael, you can go ahead and move forward.
Yeah, keep moving forward, Michael. That'd be great.
Okay.
Do we want to have Roth and traditional? Okay, so we have a question from Olga. She's like, do we want to have a Roth and a traditional? So Olga, that's a really good question. I think Michael's going to break that down for us in a certain segment. Yeah.
Well, no, I can touch that now, actually, because that's a really good question that comes out a lot. So the rule is you're allowed to have both, but there's a max contribution limit that you can do. So, for example, in a given tax year, you can contribute up to $6,000. The IRS doesn't care how much you put into each account as long as aggregate total doesn't add up more than $6,000. So some individuals, based on their income and tax bracket, might make sense to contribute more into a traditional or a SEP IRA, or it maybe makes sense to split it up and have some in a Roth account and some in a traditional. As long as each year they don't add up to more than $6,000, you're okay.
Interesting. Okay, got it.
Excellent.
I hope that answers the question, Olga. Also, Olga, just so you know, and just so everybody knows, you guys can contact Michael, fieldswealth.com, and Michael is our financial advisor. He's the one who handles all of our money, our finances, whatever. He's generously offered his services complimentary to anybody who's listening or who's watching who want help and instruction. He's happy to walk you guys through which accounts you should have based on your particular situation.
Exactly. And moving forward, I mean, there really isn't a right or wrong way to do this. It's really easy. And well, Michael's made it really easy for us. And it really doesn't take a lot of money to start. So moving forward, Michael's going to break that down and show you how.
Yeah.
All right. So going right on to the next piece, I wanted to create something because I had a lot of questions from my clients that are either small business owners, millennials that haven't started, and they said, what would be a good way to get started? And I said, let's take a look at, let's just assume that coincidentally enough, the $100 challenge comes.
Wait,
Go
we
up
didn't
one
go
more
over the
slide.
$100 challenge.
Now we're going to right now. One more slide up.
There we go.
There it is. So I came up with something that I thought that most of us should be able to do, because once again, once you get it started, it's so much easier to add to it. That's just the challenge. Get it started. And what 3 accounts would I implement today if I were you guys? And it's going to start off with a safety net, a general investing account, and then a retirement account. And more specifically, I wanted to take, let's say if we could take $100 a month from the $1,200 that we get as an individual filer. How would I break out $100? Now everybody's a little bit different, but at a high level here, you could aggregate $30 into your safety net account, $30 into your general or goal account, and then $40 to your retirement. That would be a great way to get a foundation started for yourself. And I will almost guarantee that in a year from now, you would be in a better situation than today. Now, not everybody will be able to do that, but it's a great way to get started for those that are interested.
That's awesome, Michael.
Challenge.
Thank you for that $100 challenge from Fields Wealth Management. And you can scale that however you want. Maybe 100 is too big of a number for you right now. Excuse me. So maybe you'll do,
50 or
20, 20, and 30.
Yeah,
who knows?
Exactly.
But and putting this money into these 3 different accounts would require potentially opening up 3 different accounts. Is that right, Michael?
That is correct. And like I said before,
and the purpose of the 3 different accounts is because they would each be invested differently to grow differently. Is that correct?
That is correct. So underneath, if you guys can see, the safety net accounts are 99% of the time are going to be invested in a conservative fashion, whether that's ultra conservative or conservative. Really, all that means to you guys is what percentage of that account is subject to a portion of risk. And remember, risk isn't always analogous to return. However, we need some sort of risk to get some sort of return. So when I say risk, think of stocks. And not all stocks are bad. And I know some people might go, I don't know anything about that. That's okay. I will explain how technology has leveled the playing field for all of us. Going right down to general investing, you notice how it's a little bit more moderate of a risk. So what we see is we can take on a little bit more because we have more time typically in our goals-based general investing account, all the way to retirement accounts, which are designed to be more aggressive because we have 10, 20, 30-year time horizons when we actually need to start taking money for our retirement.
Absolutely. And I think that for anybody who's watching who don't have accounts, the hardest part about starting something new is actually starting. And so don't put this information on the back burner and leave it in a notebook, set aside. Really take note of this information and put it to use. I mean, it seems hard, but it's actually really simple. And even Michael's $100 challenge, maybe some of you might be thinking $100 is too much to do a month, but somehow it always ends up working out. No matter what amount of money that you're trying to set aside for investments, you will come up with the money and it will work. So
especially after taking our first class in the workshop, where we talk about goal-based savings and goal-based investing, and how we talk about making that part of your essential expenses and moving that to the top of your priority list. Just as important as your rent or your mortgage, just as important as your utility bills. You put your savings and investing, money for the week into that essential category. So no matter what, it happens. Now, Michael will get into this probably a little bit later, but we automate a lot of our investments. So I don't even have to do anything. The money just comes right out of my account on a predetermined day, a predetermined amount, and it goes into the proper investment account. So it's really easy to automate some of these things moving forward once you get it set up, so you don't even have to deal with it ever again. Although I like looking at my stuff all the time. I'm logging on constantly.
And Michael, you're going to go over how if people have an emergency or need to take out these funds, what that process looks like too, right?
Absolutely. That carries right on. So next piece here is really where to start. And I always like to highlight this because I've been in this business so over a decade, and I've learned a lot about what to do and what not to do, and I've seen a lot of people make, I wouldn't say catastrophic mistakes, but things that they should be aware of. And so, number one thing, I created something called the no test. As silly as that sounds, I'll go over some things that you want to look for if you're looking for somebody to work with, or you're currently working with somebody. Some key questions that you want to pay attention to um, would range right around figuring out, number one, are they a fiduciary or a broker? Now,
What's a
some people would
fiduciary?
say those. Okay, so a fiduciary is somebody that has to act in your best interest regardless. And an easy way to test that is, does your guy make a commission for selling you something? So most brokers, or all brokers, don't have to follow a fiduciary standard. They could pretty much sell you anything. And with the world of investments that have over 50,000 different options out there, some investments cost more than others. And so be aware if you're not working with fiduciary, make sure that that broker or what you're paying for makes sense for you. So usually if you see a commission or a sales charge, those are things to watch out for that come out right away to do business with somebody. Also be leery of subscription fees. I won't mention companies, but there are some companies out there that charge somebody, we only charge $3 a month to access our platform. Well, if you're only starting with $100, over a year period, you've paid $36 in fees, and you only had, maybe $100 in there. That's excessive. So pay attention to that, because sometimes it may not be the best fit for you. Any questions on that piece there? What to look for? The no test?
I don't think so.
No,
So,
I think that was
so let's jump straight in. So the next step. So I like to break it up into two pieces: the do-it-yourselfers, or I want to do it myself, and then please help me. Um, there's a handful of firms out there that work with people like us. I'm not going to guarantee that you're going to get somebody on a one-on-one basis. You're probably going to get a 1-800 number, and at this time right now, good luck. But Vanguard, Fidelity, Schwab, Betterment, TD Ameritrade, all great platforms that can satisfy the no test. For those that want some help, look for people that are registered investment advisors. That's a good place to start. It's a simple question. Are you a registered investment advisor? Are you a fiduciary? I'll give myself a plug. Why I started Fields Wealth Management is I left the banking world for a lot of the reasons I mentioned before, and I wanted to focus on individuals that are more like me. I get much more enjoyment out of it, but mainly it's because it's the note. You got to practice what you preach. Jules and Liz mentioned, I wanted to do something to contribute back. I'm offering complimentary reviews. You go to my website and schedule an appointment. I will sit down. I'll go through. Even if you say, Mike, I want to do this myself, I'm happy to do it. The way I've structured my platform is that as your money grows, I make money as well. I don't charge any commissions. Like I said, I satisfy the no test. You don't write me an invoice. You don't write me a check. None of that happens. Like I said, as your account grows, I grow with you.
So Michael, let me
keep that in mind.
Let me interject really quick, just to kind of give the explanation to the hairdressers also about some of this. So because I'm with Fields Wealth Management, I'm not like incentivized or anything with this. Literally, I just asked Michael if he could help other hairdressers the way he helped me. So just to be clear, like I don't receive a bill or an invoice or anything from Fields Wealth Management ever. So Michael's services get covered as long as my investments do well and make money, then a small percent, or actually it's a fraction of a percent, I think, gets taken out automatically to cover Michael's costs. So I'm never billed. I never get an invoice. I can, call him, make appointments to talk to him about everything. I also have full access to all my accounts through his app where I can go on and see everything that my money is doing or whatever. So just to be clear, so you guys all understand so you all understand the way that Michael gets paid by doing this service. You will never receive a bill from him. You will never receive an invoice. You will never have to pay out of pocket. Your payment to him is from your investments. So when your investments do well, it's like 0.5% or something a year comes out of it. It's like nothing. I don't even know it's ever gone.
Well, thank you.
That's the important thing, is I never have to worry about getting a bill or an invoice from Fields Wealth Management that I'm gonna have to figure out how to pay. So that's what's important to me, is like one less bill.
You said it perfectly.
Okay,
Good.
cool.
If there's no questions in there, we can jump straight into what I think is a neat piece here. And I've got approval from Jules already. I wanted to show you guys an exact example of what it looks like to get example a foundation going. And that right into how I can help and what you'll actually see. If you went to my website and you wanted to get started, I will walk through exactly what to expect and how to do it quickly.
Michael, let me
Is that all right
interject
with you?
really quick. Just really quick, I wanted you to point out also, I know that there's a really like special reason why you're able to help and invest for people like us who have not a lot of liquid assets. Maybe we don't have a lot of extra money. Maybe we have $0 to start, but we know that when we get our stimulus check, I'll have $20 that I can invest. So what is the difference between utilizing Fields Wealth Management and you to do our investments versus TD Ameritrade or Vanguard or whatever? If I contacted them directly, why couldn't I just do that?
Right.
Is it because I don't have enough money? Wink, wink.
So when I started my firm, I wanted a large portion of it to be dedicated to individuals like us. And in order to do that, I had to go out and find the right place to partner with that had the technology, that had the platform where I could send clients to accomplish all the things you said. And the criteria I had was satisfy the no test, no account minimum, no annual account fees. Because I envision that I want all of my clients to have a goals-based account for something that they want to achieve. And I don't want them to have to pay for that. There shouldn't be a cost for doing business. And in this day and age, I have the right partnership with a firm called Betterment, where they give me access where I can help clients to do that. I have clients that have, no joke, that have $1 in each account to get started, clients with significantly more. But that was the whole purpose of this, was to make investing accessible to everybody. You don't have to be a millionaire anymore.
Okay, so what you're saying is previously, to invest through some of these larger companies and strategies and reap those benefits, you had to have a larger amount to invest. You had to start with like tens of thousands, if not hundreds of thousands of dollars.
And now you just need $1.
So now, right, to be able to take part in this type of investing, you can get started right away by setting up the accounts and utilizing as little as $1. Is that right?
Well, not even that. You don't even need $1 to get started. And what I'm going to show you is it's all about creating a goal and how do we get to that goal. Maybe we don't start today, but I have people that said, you know what, I want to get to this. I want to save $10,000 in the next 2 years. What will it take for me to do that? And so what I'm going to show you going forward here is what something like that looks like. Because once we can envision it, it's more attainable that way. But you don't even need $1 to get started.
Love it.
Let's pull up that slide. What's the title of the slide?
Perfect. Okay. So if you go to my website, I wanted everything digital. So you can click in, you can hit one of the links that say start building wealth now. And one of the first things you're going to see are you need your name, your email address, and then think about the first goal that you want to achieve. Whether you reference back to the $100 challenge, I'm going to you just setting out quickly. In this case, you're going to see this exact screen. It's going to ask you, what's the purpose of this account? And the general investing account is synonymous with a goals-based account. So I'm going to actually, and I got permission from Jules, I'm going to use Jules as an example of exactly what we did for her in one of her goals-based accounts. So once you've created, you've picked, we're setting up the goals-based account or general investing. I sat and I worked with Jules, and she wanted to create this Number one is creating the name, and she called it Jules's OMG account, referencing back to Networth and Bill. But
I told you guys, this is how
deeper.
we wrote everything so that it was familiar to us, relatable to you, lined up with our class. So we wanted everything to be simple. And Michael was gracious enough to set up a portion of his website and his online wealth management business so that you could also name your accounts whatever you want, because I wanted it to say my OMG account.
Refer back to our April 3rd class.
Yes, and more specifically, Jules has a different goal inside of the OMG, and you can get as granular as you want. I know I've heard Liz mention this, whether it's a new car fund, a vacation money, anything you could imagine, you can put it in there. Jules is using OMG. I know that she wants a place in Fiji, so
Thailand.
Thailand. That's right, Thailand. And she said, "Well, how much do we need to get to that goal?" And she says, "I want to save 250,000." And I said, "Well, how long do you want to take to get there?" And she goes, "Well, I want to see what it would look like to get there in 15 years. So once again, the three variables that are important is creating a name for your goal, how long you want to take to achieve that goal, and then how much that goal is going to cost you. Now, nothing's set in stone. This is just a starting point. And then we can go ahead and flip to the next screen unless we have questions on this piece here.
I think we can go ahead and keep moving. So far, no questions, but feel free to chime in anytime you guys drop questions in the comments. All right.
So I apologize for the blurriness, but once we've set that in, those three same variables will then show up on the next screen. And what it's going to ask us is, okay, do we want to set up a reoccurring deposit, a one-time deposit, or do we want to change the time frame that we want to achieve that goal? So in Jules's particular case, she wanted to, what would it look like on a monthly basis for me to reach 250,000 in 15 years? And the computer's smart enough to tell us that we should be saving approximately $952.44 on a monthly basis. Before anybody else asks, the other piece of this is if we wanted to do a one-time deposit. Let's say I had a bunch of cash, I just wanted to front load this goal today. Well, actually that number, which I don't have in the screen here, is 125,000 to get to that goal. And then lastly, if you said, you know what, those are attainable, what if we increase it from 15 years to 25 years? Well, that would then reduce the amount we need to save each month. Ideally, what the benefits are is that we get to work, either it's on a monthly, quarterly basis, to figure out if you're on track to reaching your goal and then being realistic about it. Inside of this chart here, you should see there's a little green button that will say to you whether you're on track or off track. Sometimes it can be annoying because every time you log in, it's going to tell you which goals are on pace to reaching them and which ones aren't and what we should be doing. Does that make sense?
Yep.
Absolutely.
Excellent.
So, Michael, I know for my account, if you just want to share this with people too, is for that account, it's set up for, it's a 900 something a month. I automatically have that taken out of my regular, checking account and deposited into that particular investment account. And that happens every month. So I don't have to think about it. It just happens automatically. Now, also, if I have times like last year, for example, I got a big tax return or something. So I had this, maybe it's $2,200, let's say. I could take that lump sum if I want and be like, you know what? If I want to put this into this calculator and see how much forward this will get me, I can do that too. I could do a one-time like lump sum deposit. I have $500 extra from selling product this week. Boom, throw it into that one. Because then I get to see that I'm getting to my goal faster.
Exactly.
Whether it's that account or a different account.
Yeah. Well said. That's perfect. Everything is, you can change it at any time. I mean, we know one of the things about financial planning is that there's really nothing set in stone here. And as Jules mentioned, if you want to say, okay, what would a lump sum do for this particular goal? Well, it may reduce the amount of time that it takes us to get to that goal, or it might reduce our monthly payments that we make towards that goal. And when I say payments, this is your money. This isn't going to anybody else. All these accounts are designed to be liquid. So in the event that we have a total emergency, within 24 hours, you can have all the money that you need back to you. Once it's set up to your account, everything is liquid
too, right, Michael? The other day when we were talking about our
Yes.
cash reserve accounts, I asked Michael, I said, well, what's the difference between having money in my savings account versus having it into this cash reserve account through him? Do you want to explain to them about the interest rates?
Great. Yes. So I don't know how many people have taken a look and seeing what they're earning on their checking or savings account. I'd be shocked if it's greater than 0.1%.
Does
It'd
anybody
be
in
very
the comments put a number one if you know that number one, your checking account should be earning you money? So put a number one if
or
you
your
knew
savings
that or
account.
have that, or your savings account. Yeah.
Anyway, keep going, Michael.
Okay, so with a cash reserve, one of the benefits of working under my platform is I worked out a way so that I could get a FDIC fully liquid savings account that's earning significantly more interest than your standard checking and savings account with no restrictions tied to it. Now that interest rate has dropped because I'm not assuming everybody is following the 10-year treasury or what's happening on the yield curve, but nationwide interest rates have fallen to historic lows. So funny enough, about a month ago, they were paying 0.7. Now they've dropped to 0.3. Across the board, it's happened that way. Now, sometimes you may actually see a commercial on TV or on a website. They're going to say promoting a 1.5% money market. Well, be careful to read the fine print there because I always like to say no such thing as a free lunch. If somebody's offering significantly higher interest rates, there's usually a catch to it, whether it's keeping assets in there or money in there for a long time versus the first $1,000 gets this rate. There's a lot of little tricks that they put in there. I like to call those gimmicks. But I wanted an account for my clients to be able to get in and say, I want a liquid account that I can access anytime I need to that's paying more than my current savings and checking account. And that's the cash reserve option. Mm-hmm.
Perfect.
Awesome.
And it's super easy to get money from that account right away, right? It's not like it's held up or they can't get it right away if they needed it for an emergency or something.
It's like a regular checking account.
Okay.
It's exactly like a checking
account. Just to make it clear for them.
Yeah.
And also just to make it clear, when you talk about interest in these in this context, interest is referring to how much interest your account is making, as opposed to when we talk about like credit card interest, that's like interest on the debt.
Right.
So that's like bad to have high interest. Whereas when you're talking about your accounts that you use for investing, it's good to have
the interest.
Interest is high. That means how much you're making, as opposed to the interest on the debt with credit cards. It's how much they're making.
You're getting money just for allowing your money to sit into that account.
Yeah,
exactly.
That's what the different types of interest.
And circling back to this whole thing about having different accounts and segregating, as Networth and Bill has shared, in this day and age, you want to be as efficient as possible with your money when you can. So I always ask clients or people that I work with, I go, well, you have so much money sitting in a checking account. What is it actually doing? Well, Mike, I'm really scared of the markets. I'm scared of risk. I say, okay, here's an account that's FDIC insured that's going to earn you usually 30 times what you're getting in your standard checking and savings. It isn't subject to traditional savings account rules. And I don't know if anybody knew this, but there's a max amount of times you can withdraw money from your savings on a monthly basis, and that's typically 5 times. In this account, you can withdraw, add as many times as you want. So it's a truly liquid way of saving. It's a completely free account, as it's strictly for cash. So if you guys leave here today, take a look at what you're earning, and if you have a cash reserve, take a look at what you're earning interest-wise. See if the rate I have is a little bit better, because every penny helps. It sounds cliche, but it's true.
Perfect.
Awesome.
Sound good?
Excellent.
Yep, yes, thank you, Mike. So yeah, continue, Michael. This is great. If anybody has any questions, again, drop them in the comments here. And yeah, Michael is a wealth of info for us.
So moving forward, there's only 2 more steps left, guys, I promise. The next one is once we've we figured out what we want to contribute, it's getting back to how that account is invested. Uh, I won't go into what the differences are stocks or bonds, but what I want you to think about is inside of this chart for this account, because we have a
Sorry.
oh, that's exciting.
Sorry, we had like an emergency alarm thing that went off on a phone.
Sorry.
It was very
I
weird.
said it just to wake everybody up.
Yeah.
Sorry.
Am I putting everyone to sleep? Okay.
No.
So in this in this account here for what we set up for Jules, I don't know if they can see this, but this account is set up to be a little bit more aggressive because we have a longer time horizon and because we're contributing on a monthly basis. This account is dedicated towards 90% stock and 10% bonds. An easy way in your head to think about stocks and bonds, if you're familiar with it or not, stocks are like our sword that we want to attack with, and bonds are our shield. So when stocks or the market is doing well, wonderful. Bonds don't do as well, and vice versa. So when things are really scary and markets going down, bonds do well and stocks do poorly. So that's just the touch point of what we call as diversification, not keeping all our eggs in one basket. But a lot of people say, okay, well, just tell me what this account should do. And what we can see here is we can see based on statistical data ranging back to 1950 on how this style of an account has performed through different market cycles. And Jules, I don't know if you can read that. I can barely read it. Wait, go back one more. I wanted just to show the highlight on that previous slide. What we can see is it's going to tell us in a poor market, like what we're facing today, versus a strong market, what our 1-year return might look like versus our 15-year return. And over a 15-year period, Jules, if you can read that bottom numbers to me, I can't see them. In a poor market, we can anticipate. See if you can peel it.
I know. Sorry,
I can't see.
Okay, so in a poor market, it says in 1 year the return on this in a poor market would be down 25%. In a strong market, it would be up 47%.
Correct.
Now, if I waited out the full 15-year plan for this account, because it is 90% invested in stocks, which are much more aggressive, and only 10% is invested in bonds, which is a slow and steady investment. So because we're at 90-10 doing a much higher risk style of investing, if I leave it in there for the full 15-year return, my worst case scenario is going to be that I'm up 3%, which is excellent. Now, my best case scenario is going to be that I'm up 436%. So with this style of investing, like Michael was saying with the 90-10, this is better for long term because I can weather more storms because I have a longer amount of time to see this return. Did I explain that kind of correctly, Michael?
You did, and I'll jump into one more piece there. What this is showing us is the value of longer term. Now, if I were to pull up a conservative account, it would actually be flipped. So 90% would be in what we call as the bonds, and 10% would be allocated towards growth. And the numbers would look significantly different. But remember, the longer time we have, the greater probability of achieving this goal. And a last piece I'll add there is some people may say, well, what happens when I get to year 14 or 15? I don't want it to be that aggressive. Well, what the system I have built will do is every single year, it will slowly reduce the risk in that account. So as we get closer to our goal, the numbers will actually start to flip on its own.
Wow, that's incredible.
You don't have to worry.
I love that.
Mm-hmm.
Excellent.
That used to be a big draw for advisors or wealth managers is saying, well, we're going to do this for you, and that's why we're charging 2%. And it's like, no, in this day and age, it can automatically be done. So I might become extinct eventually. Mm-hmm.
No, gosh. No, you'll never be extinct because I never want to have to go on and deal with this all by myself. Yeah, I still want you to be able to do it for me. Yeah. So no, you will not be extinct, at least not to us. Right. So that's amazing. Now, if anybody has any questions to chime in the comments here on YouTube, that would be great. Now is a really great time. And again, if you're just tuning in or tuned in late, Michael's with Fields Wealth Management. He does our personal finances. He does my finances. And I asked if he would be willing to help and share with my community of hairdressers and other industry professionals what that looks like, what he does for us, how he's helped set up for my retirement, my savings, different things like that. And he's explained to me how different investment accounts work, which has given us the knowledge to make different choices with investing for our company, for ourselves, and to keep us.
For you guys, I mean, this is a completely different way of doing investments than it's ever been done before. So definitely, I'm really glad that all of our viewers are here tuning into this, because this is super helpful information that's only going to help benefit you from here on out. So
yeah, this is an investment style that hasn't been available to people like us before.
Ever.
And when I say people like us, I mean people who maybe have less than like $100,000 in cash to invest. Mm-hmm. So
or don't know where to start.
Yeah, exactly.
Or don't work for a corporate company. I mean, this is huge. So
yeah, so everybody has access to this. Everybody can put themselves in a financial position that they're proud of, that is sustainable, that is easy to navigate, and with help from Fields Wealth Management one-on-one.
Yeah.
So back over to you, Michael.
So there's one more step.
Okay.
Right?
The last step is what really ties everything together. And this is the beauty of having this type of investment strategy laid out, is I want to be able to see everything in one place, right at the fingertips of my phone. You'll be able to do that. And Jules gave me permission to show it, but what Jules actually sees when she logs in is all the accounts that we discussed. That the top one you see, Jules' OMG account. She has her cash reserve. She's got her NBD account, her WTF account. And inside of this, if we dove a little granular, when you have your dashboard set up, you'd be able actually to see which is on track and which is not, and make adjustments just like we did in the second or third step. And finally, at the very bottom left of this screen here, you see everything tied together. You get to see your actual net worth. You get to see all the accounts. You get to see how much each account is earning. And lastly, what about making changes at any time? Also, you can click on each account and say, I need a withdrawal now. No problem. That same day, it will get spit out to your account. Other big pieces in this, but I will save that for a later piece.
Sorry. I was just laughing on the zoom in on my like personal finances. Thanks, guys. Sorry. No, I'm just teasing. A little fun with the camera guy there with his like super zoom onto all my stuff. No, you cannot borrow any money from me, guys.
So with that being said, to wrap it up, once again, this program I wanted to create for people just like us, to have the benefits of saving towards a better tomorrow. Cheesy as it may be, times like this make us think about if we had this a year ago, where we'd be today, because you'd have your certain accounts laid out so you would know, okay, great, I'm in a time of emergency. Where do I draw money from first? And that's why we have the different accounts segregated. And that's why I have the no minimums and no annual fees in there. So it gives everybody the chance to achieve financial success, I believe, and that's what I'm passionate about. Visit my site, set up a time. I'm happy to sit down and chat with anybody who wants it. Other than that, I think that's all I have for today.
Wow.
That's all, folks.
That's all. That's a lot.
I know.
Were there any slides that we didn't go over in your presentation, Michael? I'm not sure. Just wanted to
No, we hit them all. I think we did.
Okay, great. Great. A disclaimer. These are all legalities, compliance things. Great.
This is where it'll say it. I'm a registered investment advisor. You can, on my website, I have all my background, all my info. So if you want to see who it is that we're listening to, happy to go through that. Take advantage of the one-on-one. Happy to do it for you guys.
Awesome. Michael.
Excellent.
Thank you so, so much. That was so helpful, so wonderful.
Yeah, thank you so much for offering your knowledge to us.
Thank you.
To share with all these viewers here on the Hair Game YouTube. We are super appreciative, especially in a time like this where everyone's feeling a little bit frantic and not really sure how to move forward from everything. I hope you guys can hear me. Sorry. I know it sounds like I'm whispering all the time. Anyway, but yeah, thank you so much. I really, really appreciate you being here. And yes, you guys, Michael Fields is here to help. We've put a couple links up in the comment box, so please be sure to click on these links. Hit him up. He wants to help. He's here to help. So are we. If you guys have questions and want to ask us things on the side, you guys are more than welcome to email us or to DM us on Facebook, on Instagram. We are here to support you guys. So
yeah. And just once again, for anybody who hasn't been listening the whole time or whatever, you guys, Michael is giving you guys this gift, okay? This is like a free gift. We are leveraging our relationship with him, our working relationship, our personal relationship. His help during this crazy time has been so beneficial for us. So he wanted to gift this to you guys as well. So seriously, you guys, Michael can help you start with your finances. Like we said, no charge. He doesn't charge you. You're not going to get a bill from him. He's happy to sit down and do like a very comprehensive financial planning like session with you. I'm offering him up for it.
And like I said, you know, a lot of this may not come like first nature to any of you or to some of you, and it definitely didn't come to me. The hardest part about doing any of this stuff is literally getting started, because it's foreign for some of us and it's new and we don't know how to do this, and it's, you know, nerve-wracking to be moving your money around, especially in a time like this. But there is no better time to start than now. And once you get past that initial scare and just do it, hit him up or whoever and start your investments, you're going to be so happy. You know, even 3 months, 6 months, 10 months, 10 years from now, I mean, your life is literally could change significantly if you utilize these tools. So do not be afraid to start.
And it's the way I look at it is it's like a fancy direct deposit system. And if you know how to do automatic bill pay, which I'm sure everyone does, it's like that. I set mine up like auto bill pay. I don't even have to think about it. I don't even have to do it. It took me about 5 seconds to get everything started and ready. And now I just set it and forget it.
Like, you guys can start with like, you know, $5 or $10, and you can always change it, or, you know, and make adjustments to it. Or say you're putting in $200 a month, but then, you know, you had some crazy thing happen, like can't work because because of the coronavirus. You can scale that back to being like $10 or whatever it is. I mean, everything is so customizable that it's not set in stone. So however you start does not have to be how you finish either, and you guys can change it. So I mean, the flexibility is huge when it comes to this and the investment portions of it. So.
And then just for
Jules,
our own little bleeding heart purposes. Oh, yes, Michael, go ahead.
Yeah, I wanted to add one more thing that even if you already have some things set up and you want a second pair of eyes to look at, that's what the consultation is for, or just the review. I hate the word consultation. I will sit down and work with you. I don't charge anything for that. You don't have to work with me, but I'd be happy just to take a look and make sure you're in the right place if you already have things set up. So keep that in mind as well.
That's a very generous offer also, Michael. Also, just from our little bleeding hearts, Liz and I have always been really passionate about education, and what type of education and what we teach has shifted over the years. But one of our main goals is to not only provide accessible education for our industry, but to provide like comprehensive financial literacy for all beauty industry professionals. That's not something we learn in school with what's required for our licenses. That's something that a lot of us have had to figure out on our own, or we rely on, you know, maybe our partner knows how to do it, or maybe the guy at the bank can help us. But we really want to shake that up and change that in this industry. We believe that every hairdresser should be financially literate. We believe that as an industry, the amount of money we make versus the kind of lives that we get to have it's not proportional. It's not right. And there's a new way to invest. There's a new way to save because we make money differently. So there's different ways for us to be investing our money and saving money so that hairdressers can also have retirement accounts. Hairdressers can also buy new houses. Hairdressers can also send their kids to public school or private schools, not public schools, private schools, and take vacations and have a second home, vacation house or whatever, as long as we know how to invest this money properly, or if we know someone who knows how to do it for us, like Michael. So again, part of our mission is to change the stereotype about hairdressers and to create a culture of financial literacy within the beauty industry so that we can all be considered a first choice career and a first choice education.
Absolutely. I mean, and just to add to that,
Thank you for coming to my TED Talk.
I know, right? Yeah, just to add to that, I mean, and I said this in our first presentation, what we're doing is we're trying to set you guys up with a solid foundation to be able to build, in theory, your house, right? So in the first portion of our class, we taught you how to do like save or personal our first
Personal
class,
finances?
Personal finances.
Yeah,
thank
financial
you.
fundamentals.
I was going to say personal savings, but that wasn't right. But personal finances, this is savings and saving strategies. And in our next class, which is on April 9th at 12 p.m. here on the Hair Game YouTube channel, it's all about business ethic and fundamentals. So
business finances.
Business finances. Thank you.
Business finances. So we took you through the financials for your personal finances. We've walked you through now step 2 with Michael. He's walked you through what different types of accounts you could have, should have, could be investing in, should be investing in, whatever. Mm-hmm. So now on our last episode, which is on the 6th, same 9th. Time. Oh, 9th. Yeah. Sorry.
We don't know what day it is.
Literally. It's like the 11th of
we're going to go over all the business stuff, all the business questions you guys have, running the business, what that looks like, really break it down.
We'll have a new workbook for you guys with financials for your business in it, similar to what we did with your personal finances, except one that's more curtailed specifically to business.
Curtailed. like drug cartel.
Like a drug cartel. Yeah. We're a hair cartel.
True.
Yeah.
Michael, do you have any last comments or anything else you want?
Final thoughts?
No.
Yeah.
Closing arguments.
Here on CNN.
For all those that watch the markets, it might seem kind of crazy out there. It's up, down, up, down. Today is a tremendously huge up day. Don't pay attention to it. It's going to be chaotic. No need to panic. We will get through it. Everybody stay safe. Keep the distance if you can. And we'll be in touch soon. Thank you, guys. Keep up the good work.
Good.
Michael, thank you so much.
Thank you so
My
much.
pleasure, guys.
You guys can follow him on Instagram at Fields Wealth. You guys can also follow us on Instagram and Facebook at Beyond Beauty School. And if you guys have any further questions, you guys can either DM us or email us beyondbeautyschool1@gmail.com. We are here to help and support you guys. And we are too part of the Salon Republic family. We have a studio here at Salon Republic in Torrance. So,
and next up, we're going to get Michael to get a studio at Salon Republic so he could be like in-house helping us with all of our finances, like down the hall.
We'll trade finances for a haircut, right, Michael?
I swear. Michael will be shaved bald by the time all these hairdressers get their hands on him trying to trade haircuts for financial advice. But like I said, the good thing about Michael is you're never going to get an invoice from him. Yeah. So you don't even have to cut his hair. Yep. It's amazing.
Yes, and huge shout out to Mark from Manhattan Beach Studios for putting this whole thing together for us and making this look so beautiful. We definitely could not have done this without you. So huge thank you. If you guys need any content made or whatnot, Manhattan Beach Studios, you can find them on Instagram and on Facebook. They are freaking awesome. We've used them for like 3 years now on so many different projects. You guys need to hit them up.
Oh, is gold a good investment? Somebody just asked. Oh, somebody wants to know if Liz could ask. But okay, I don't know. Michael, do you invest any of my money in gold?
No, I don't. There's a reason why. Gold doesn't have an intrinsic value, meaning that it doesn't pay an interest or pay a dividend. You're really just fluctuating in the market. So, I mean, it depends on what kind of gold you're looking for. Some of my clients own some gold coins. I call that the doomsday scenario because the only way you capitalize on that is somehow selling that gold to somebody or exchanging it or bartering it for a good. This isn't the Stone Ages anymore. So I don't believe in anything that doesn't pay us an interest or give us some sort of return. You are solely participating in what the market is willing to pay for gold. Yes, when markets are really bad, people flock to gold. Not something I would recommend for somebody, not in my own opinion.
So instead of gold, though, like you have me in a lot of bonds because they'll actually make some money, especially when the market's bad. They hold some value as opposed to gold, which kind of stays where it's at or whatever.
Well,
Okay.
gold
So,
fluctuates significantly, but I can get into that piece
oh,
later
that's
or
the
more
thing
on
is
a
because gold
one-on-one.
fluctuates. Okay.
Gold
Anyways,
fluctuates significantly.
awesome. Okay, Michael,
Thank you, Michael.
anything else you want to wrap it up with? Any last little tidbits?
No, I thank you guys. Keep up the good work, and I look forward to hearing from anybody that wants that.
Awesome.
Thank you guys so much for tuning in.
Thank
We'll see
you
you back
again.
here on the Hair Game
Thank you.
Podcast
And just really,
YouTube channel.
yeah, really quick before we go, Liz mentioned she thanked a bunch of our partners, but we just want to make it clear to everybody that like everything we are all doing right now is totally for free. It's totally to help everybody. It's to help our community. It's to help share resources, whether that resource is utilizing Fields Wealth Management to help you, or whether it's utilizing, Mark from Manhattan Beach Studios to help us with this live stream so that it looks nice and I can't figure out Zoom. So whatever. Do you know what I mean? So it really takes a village, and it's a really crucial time to lean into that right now and to be there to support each other. Like Salon Republic is so supportive of us, letting us use this platform, and to all the stylists that rent from Salon Republic. So there's a lot of moving parts, and it takes a lot of people to make even just this little live stream happen. So just a really big shout out and thank you to our community and our village that supports us. So make sure you guys all send a little love to your communities and the people that support you too in your village.
Beautifully said. So
thanks.
We will see you guys back here on the Hair Game YouTube channel April 9th at 12 p.m. going over all the business financial fundamentals that you guys need to know to move forward in your career once we are back in the salon.
Yeah.
Okay.
So thanks a lot, everybody. We're going to sign off. Thank you guys for tuning in, and we will see you on the 9th.
Woo! Bye, guys.